Hey guys, please remember everything on this channel is for educational purposes only and is not intended as financial advice. Another week, more BraveNewCoin articles, one on Bitcoin and another on ETH. I'll go through some highlights of both of those articles with plenty of other info to check out should you be interested, which I do recommend. Let's start off by talking about Bitfinex funding rates. Super exciting stuff, guys. The TLDR is when funding rates go up, that typically says that it's more expensive to short something. And so I just sorted it in a table, and what it looks like now is that for whatever reason, this is my narrative, that lots of people are in XRP positions right now. Whether or not those are short or long, they should be short, I think. I don't know. They might be long XRP BTC. But funding rates are, or XRP ETH or whatever other pair is on Bitfinex, I don't know. But funding rates are obviously very high. They're also very high for ETH. We'll get to that later in the video. BTC not so much, not very high. But yet shorts, open interest is actually pretty high on Bitfinex. So here is the open interest for Bitfinex on Bitcoin. You can see we're at all-time highs. Just because the data isn't here doesn't mean we haven't had prior info beyond August. It was on BFX data dot whatever and is no longer up anymore. Anyway, the point being, when we're making patterns and we have things like longs or shorts at an all-time high, that tends to tip the scale in a lot of people's view one way or the other. Now, if you look at 2015, we had an ascending triangle, which has a bullish bias, with shorts at all-time high at that time. And the narrative was, we're due for a short squeeze. Here, things are a little different, a little less clear. Shorts are at all-time high. Again, we have, which could be the new normal, I don't know. We have either a falling wedge or a descending triangle, which typically has a bearish bias. So I'll get to that. But if these lined up, it'd be a lot easier. They don't line up, so it's a little more difficult. There was some price action today, kind of whipsawed all over the place. I don't really know what to make of that other than it is what it is. People were saying it might have been CBOE related. So there's the CBOE and there's the CME. Both are in Chicago. Both have futures. The CME is much larger than the CBOE. My big thing was that just knowing that the contracts close on certain days makes people more aware of the chart, makes people more aware of what's going on. Has people set stops, yada, yada, yada. So it wasn't necessarily, to me, in my opinion, the volume of the CBOE, but just the fact that like any kill zone or time when certain people are watching the chart, there was just a lot of attention to the price, I think. So it might have been like a pre-planned sell order. Who knows? But I think it was related. So these are the CME orders, futures close open days. So we're coming up on September 28th in a few days. Something to pay attention to. And then October 1st kicks off Q4, which has historically been a big mover in Bitcoin price. So expecting at least a 50% move. Here is the same old falling wedge I've been showing for weeks and weeks and weeks now. Probably since June. We since at least June that we've been somebody, maybe not me, but we've been talking about this Wyckoff thing, and the more we slide down this, the less and less it looks like anything Wyckoff related, and the more it looks like it's just a pattern that's dominating this. The Wyckoff people might say otherwise, but to me, the Wyckoff stuff kind of takes a back seat for the moment. And it's just predominantly pattern stuff. So yeah, falling wedge, we're just bouncing, tighter and tighter range. And the idea is that falling wedge is bullish. We should see this if we break up. But there are targets for the downside using Bulkowski's measure rule, which is this, and you get this value. Bulkowski's measure rule for, if you're wondering who the hell that is, he's just a guy who's done chart patterns and studies on them, and basically collected data over many years, and that's what he's found. Anyway, the bullish target is essentially the same as it's been 4 months, which is 10, 11, 12K, somewhere in there, 10 to 12, pretty easily. That's what everything's pointing to here, including the yearly pivot. So that won't happen like immediately, but that's the eventual target for reaccumulation. And then I expect like a 200-day, another thing where it's like we get to that point and then we need more consolidation to move any higher, most likely, if that's what happens. Also kind of looking at this RSI, not really know what to make of it. RSI is interesting. All oscillators are interesting when things are going sideways, especially because it can tip the move a little bit. We're certainly below 50 here, so if it's below 50, it's bearish. If it's above 50, it's bullish. And if it's above 70, it's overbought. If it's below 30, it's oversold. But just looking at this, we're looking at a bullish falling wedge, as they always are, and you're expecting it to break up. But to counter that, you have the bearish descending triangle. Now, virtually nobody draws the falling wedge. Anybody who knows anything about anything on Twitter or these fund managers, I haven't seen anybody draw it as a falling wedge. I've only seen people draw it as a descending triangle. People in my circles who we talk about price and whatever. So from my perspective, nobody believes me or thinks it's real. I'm probably wrong, so whatever, but it's good to prepare for either scenario. If this is a descending triangle, at the bottom, so if you have a downtrend and then you make the descending triangle, that's bearish continuation. And what does that move look like? Well, we've got a few targets. I'm almost more comfortable when I have price history because then I can use like previous accumulation zones. Those are just easy horizontal support resist. But when you're in price discovery mode, it's a little more difficult to predict things. Anyway, so again, Bulkowski's measure rule gives you this target for up, this target for down. This target conveniently matches a previous wick. I think what we're going to see is a break to 4K-ish over the course of a few weeks. This is if we break down. Probably 1 or 2 weeks we'll see like a march towards 4 to 5K. 4K is 50% of this previous accumulation, and it is the 1.272 basically of this descending triangle. Then we will see moves to 3K, which would be this wick and yearly pivot. And I think from there we make a decision whether or not we go lower. But based on the measured move, it does go lower. Based on the 1.618 fib, it goes to some ridiculous target like 1300 or something. Yeah, I don't know. I mean, we'll see. We'll see what happens when it happens and what it looks like. But it's good to like plan this out ahead of time so that way when it happens, you're not freaking out like, oh my god, it's going down. What do I do? Where do I go? Where do I put the orders? Blah blah blah. Just take it in. Take a deep breath. It is what it is. Trade the plan. Trust the process. And that's it. Another thing I'll mention with this triangle, so it's well past 75%. This was a 75% marker of completion. We're quickly reaching towards 80% on September 29th, which is in 10 days. It doesn't feel like it's ready for a move anytime soon, so it's probably just going to keep consolidating sideways, sideways, sideways. I think we won't see anything probably till October, just based on the Q4 narrative. And yeah, upside targets, again, 13, 10, 11, 12, 13, something like that. We'll see what it looks like when it gets there. But I think if it goes up, it's going to see a massive wick and then come way down to like 10, 11K. The same thing with on the way down. Ideally, we just go down really quick. It's a V bottom, come back to 6K, figure it out from there. One thing I've been looking at now that we've tightened a lot on high time frames is Bollinger Bands. So what Bollinger Bands do is put a standard deviation of price around price action, and it helps you make a decision on whether or not there's a bullish or bearish bias. This red line in the middle here is the 20 MA. So if it's above the 20 MA and bands are tight, that says there's a bullish bias. If it's below the 20 MA and bands are tight, that says that there's a bearish bias. So if we look at historically, since 2012, we've only had very few times where price has actually been below this level of tightness on the weekly. So that just says what we all feel, which is that price is very, very range bound at the moment. If we look at that with RSI, you can see these two previous times it was above 50 on the RSI, which means it was bullish. It was also above the 20 MA, which means it was bullish. Okay, great. This zone I'll get to on the next chart. This zone was the ascending triangle in 2016. I'll get to that again. And then this zone was post Bitfinex hack, where price was actually below the 20 MA. That brings us to now. So this is only the 6th time in 6 years that price has been this tight on the weekly. If we look at the modern era, you can see that the previous tightness in the bands were due to Wyckoff accumulation, which is what we know now. I didn't know that then, but I know it now. And some of you might be like, what the hell is this indicator? So this is Lazy Bear's Bollinger Band width. If it's green, that means it's bullish. If it's red, that means it's bearish. So bear is below the 20 MA, bull is above the 20 MA, and you can set the threshold for whatever you want. So I just don't pay attention to this value, but I just set the threshold for the tightness that it is now, and then that lights everything up in the past as far as what it looked like. So you can see during the ascending triangle accumulation, the entire time we were above that 20 MA for weeks and weeks and weeks and weeks. Probably 15 weeks, something like that. It was above the 20 MA as it was getting tighter and tighter and tighter. So what this tells me is that we may be due for more weekly tightness, because we saw tightness here that didn't really go anywhere, and we saw lots of tightness here that moved higher but didn't really like explode. You know, it didn't really explode until it broke the previous all-time high. I don't think that was the all-time high at the time, but the previous high. You know, this was Bitfinex April, June, July. Sorry, this was Bitfinex hack right here, and there was a big market move down, and then we recovered. So we'll see what happens here. It'd be super interesting, like today, if we get some random exchange hack news and things go down, and then we reaccumulate over a weeks and weeks period. But one thing's for certain, you know, we're not seeing the accumulation type band squeeze that we did then, now. Maybe if I up the threshold, but I don't think that really helps try to determine what's going on here. If anything, this says, yeah, it's tight, but it's probably going to get tighter, and it's probably going to get, you know, tight like it did down here. So that feeds into the whole waiting for Q4 narrative to me even more. I don't have a explainer for this, but this is an exaggerated bull div as price goes sideways and you're getting higher lows. That's just an exaggerated bull div. You can Google it, look it up. It's similar to a bull div or a hidden bull div. They're all related. This just says it's leaning bullish. I don't really think that helps us in any way, but it's just something to consider. This is a 3-day, basically the 5200 equivalent. It's the 50 and the 225. I kind of just curve fit this just to see what it looked like. And it's basically bounced on everything here. If we get a bear cross, it'll be the first since 2015. So that won't be good, obviously. If it breaks this level, that's your short entry. If it breaks this level, that's your long entry. Keep it simple, not too hard. Set alerts for that stuff. BLX, this is the big index on the daily, 5200 and a pitchfork. So this is the pitchfork since 2015. You can see we went way above and then came right back to the median line. Now we're trying to figure out, in my mind, what's going on here. For most of this pitchfork's life, we actually lived below. So during that 2015 consolidation, we lived below the pitchfork. We can continue to do that. That's fine. I don't think we're going to fall out of this pitchfork ever. Honestly, I think it's going to take an act of God to get this below this line here. It's really going to take some event to drop us below, because I don't think anything that's been in this pitchfork trends for this long, going on 3-4 years, whatever it is, doesn't want to break that willy-nilly, just like it didn't really want to break it up here willy-nilly. You know, this took massive inflow of money. And you can see we're just sort of chilling on this diag at the moment. We broke down from the median line, broke down from the 200. So those are two more things you can set alerts for. Are we above the 200? Are we above the median line on this thing? These are just things you can check off on your box as you're deciding, should I go long, should I go short? What should my size be? How long should I hold? Where should I put my stop? Things like that. Somebody was asking me to compare the high time frame clouds and what I thought that looked like. So if we look at the weekly 2015, again, I keep going back to this, the cloud looks very similar. It kind of looks like the United States, to be honest. Like here's Texas, Florida's missing. But this shape always looked like the United States to me. Looks very similar here. You know, you had this thinning, this twist. The Kijun went right through. The narrative at this time, like September before October, was if we see a bullish cross here, then we'll get this edge-to-edge thing. And as crazy as it sounded then, we'll reach for the edge of the cloud. Very similar situation. Again, 10, 11, 12K, pointing to the same things. No surprise. That's where we're headed if we're going up. Plain and simple. What I don't think will happen is a fake out, you know, one way or the other, and then the actual move. I think the real move will be the move. So lastly, for Bitcoin, daily cloud, the thinnest it's been since we broke down all year. It's razor thin. It's like being underneath the ice that just froze, and you're like struggling, like, am I going to drown? Am I going to break out? Can I punch through? So that's what this is. It says the resistance is super thin. As we go sideways, resistances get thin, things get zeroed out. It says that there's an opportunity for up, not necessarily that we will go up. So very similar to here. We saw no resistance, no support. If there's momentum, it'll try to go through. So I will be watching this very closely if we continue sideways going into October. But the moment we go above the cloud, that's another point on the checklist that we go long, you know. Also interesting that there's this little cove in the cloud that just like dug out and then went down. It's always weird. ETH, lots of stuff. I think the most compelling thing to me that I saw, other than the lack of ICO funding, was hash rate just dying. I think hash rate will continue to die after October 30th, which is the Constantinople hard fork that they're going to change block reward, not change the difficulty. I think messing with the monetary policy in that way will help the people holding Ethereum. It'll really hurt the miners who are already hurting from mining profitability standpoint. So if I was a miner, I would just take a hash rate elsewhere. It's really that simple. The flip side of that is Ethereum wants hash rate to be gone eventually anyway. So there'll definitely be a interesting situation with playing chicken, basically, like which miner is going to leave, which miner is going to stay, and then difficulty will have to like find an equilibrium in between there. Super interesting situation. Of all the ICO movement stuff that I've seen, this is probably the most interesting. This is this website called Santiment. So it doesn't show that coins have been moved to an exchange or coins have been sold on an exchange. All it's showing is that coins have been moved out of a wallet that is being tracked. And you can see there was a ton of ETH moved out of a wallet right before we went down. The other thing you can see is less and less ETH since then has been moving around in those wallets. As we stand now, there's like 10 ICOs that have over 100,000 ETH still. I don't know if that's relevant at this point, but we'll find out if we go lower, won't we? ETH open interest, long shorts both at all-time high. Net long, don't really know how to read this, honestly. Again, it's one of those things where there's no clear-cut answer. But what I was saying in the article was if we get a move up or down, it's going to be exaggerated because you're going to be getting these margin positions closing. That's going to fuel, if we go down, there's going to be a long squeeze. If we go up, there's going to be a short squeeze. It is pretty crazy that we saw this massive jump in longs. ETH downtrending pitchfork. Unlike Bitcoin, ETH is handedly in a downtrend and will be for a long time, I think, even beyond Q4. Maybe it'll be another situation where we see alts pumping in January, sort of like we did, like December, January, like we did in 2017, because none of this looks pretty. I mean, it's got to be above 500 to be out of this, and it's far below the 200 on the daily as well. So what I was saying in the article is that the mean is somewhere up here, midpoint, whatever you want to call that. Basically, it's 260, 240, whatever, somewhere in there. I can see a nice like inverted head and shoulders. So shoulder, head, shoulder, somewhere in here, and then the next zone up would be likely out of the fork at that point, somewhere around 460. But that's probably months away, at least from what I'm looking at. On the daily though, what I am seeing is a giant C-clamp, just like there was here. And what happens when we see this, it tells me be careful going short because it's already oversold, and consider going long based on a counter trend play, because this is the equivalent to RSI being at like 10. It just says that this is really oversold. So here we happen to reach for the flat Kumo and edge to edge and blah blah blah. But the quicker trade, the higher risk trade is, as we break the Tenkin, what do? Do we go long? As we form this W bottom and break that horizontal, what do you do? Here, if we get an Adam Eve, we have an Adam left, this V. If we break the horizontal at 225, whatever it is, what do you do? Do you add at 225, add at 235, add at 280, and then start closing above 300? That's a strategy. I'm not seeing a long flat Kumo here like I did previously, so I wouldn't bet on any sort of magnet busting us up there. The 320 level would help paint the head and shoulders. So from here up to 320 and then back down to 280 and then sit at 320 as we break through the cloud. So that's all I have for this one. I've been talking long enough. Like, dislike, comment, share, subscribe. Tell 2 people about this channel. And happy trading.